Hey guys, Anthony Special here with Hawkeye Traders. Hope everyone's having a great day so far. I want to pick up where I left off yesterday and keep discussing this rule of 72. Before I do that, of course, we just need to run through the disclaimer. Whatever I do share with you is for information, educational purposes only. Please do not take anything as live financial advice. It is certainly not. So yesterday we talked about this rule of 72, and for any of you who have any financial, literacy or have had exposure to an accountant or a financial planner, the rule of 72 is basically a way we calculate how many years it takes to double your investment. So we take your fixed annual rate of return divided by 72, and that tells us how long it's going to take for us to double our money. Now listen, the objective is to clearly double your money as quickly and efficiently as possible. Today, with interest rates at nearly an all-time low, it's not that easy. Years ago, 20, 30, 40 years ago, it paid to be a saver. The banks paid you money on, interest on your money that you put in a savings account. You could buy CDs, you could buy bonds, you could buy U.S. Treasury bonds. There was all different types of avenues that were really, really lucrative for the saver. Today, that doesn't really exist. It's kind of hard to save money and earn money on that saved money at the same time. So we need to be a little more proactive. Whether we do it in the market or we buy some investment real estate or something, we need to see our money grow. And how long does it take for our money to double? So that's our objective this today and this week is to talk about how we double our money. And listen, it doesn't have to happen all in one shot, but cumulatively, you can, in a much shorter period of time, double your money than what it would take, anywhere on this graph here. I mean, even at 4%, you can't get 4% in the bank today, in any investment product. And that's really, really difficult to find. And even if you could get 4%, I mean, is 18 years really a realistic amount of time for you to double your money, pay tax on it, and then live on it? Unless you have oodles of money, and by oodles I mean hundreds of millions of dollars that you can park somewhere in that type of return, it will be very hard for you to generate enough money, to live on or to really grow and build wealth. So the objective is to show you how we here at Hawkeye use our tools on any time frame, whether it be on a daily basis, weekly basis, monthly basis, annual basis, to get a great return on our investment, meaning a return on the capital that we're using to trade with. So this was an actual snapshot of one of the days I traded last week. So this is an intraday time frame. This is very short, basic, simple trading. We're basically looking to get a clear entry and travel across from one supply zone to another, to a demand zone or vice versa. This is not complicated trading. Understanding simple principles that volume precedes price action and price action reacts to supply and demand gives you the opportunity to take these very simple, high probability hit trades on a regular basis. So let's run through the chart real quick, and just so you have some feel here for what you're looking at. All the way to the left, we have a vertical magenta line. That was a Hawkeye wide bar. That disqualifies an entry. So we just left it alone, and you can clearly see it would have lost. The next narrow dashed line, vertical line, occurred at 7:03 a.m. Eastern Standard Time. That was our opportunity to cross the field of play by taking a short position. With that short position, we had moved the market 25 ticks. Now, it doesn't matter what size account you have or what level you're at as a trader or what kind of risk tolerance you have. I personally trade with 10 contracts. You may trade with 1, 2, 5, 3, whatever. It's irrelevant when we're talking about a percentage on a rate of return. So, 25 ticks on 10 contracts paid me $2,500. Great. Perfect. Great day's pay. Day transpired. Later on in the morning, there was a long opportunity that had a good risk-reward opportunity. And listen, unfortunately, it just didn't work out. And not every trade works out. Understanding that losers are part of the equation is really a very important part of trading. So with that being said, we had a $2,500 winner, compounded with a $1,200 loser, so we netted out $1,300 for the day. So, now, we're going to use my numbers just as an example, but you could add or subtract zeros wherever you want to custom this to you. The percentage of return doesn't change. So, to buy 10 contracts on light sweet crude oil, you need about $60,000 of capital in your trading account. So if you're doing one, you just need about 6. So with that being said, I'm going to take $1,300 because that was our profit for the day, and I'm going to divide it by the capital I used to take this trade, 60,000. And that gives me a 2.166667% return on my capital for the day. So I never lost my 60,000. I just utilized it twice to enter 2 trades, but I got a return of a little more than 2.16%. So that may not sound terribly exciting because guess what? It's not. But if you do that on a regular basis, if you could get 2% a day, 5 days a week, that's 10% a week. It's 40% in a month. Listen, that is what becomes, that's when you start to be able to compound into building a real great rate of return on your money. Listen, if you did that over and over and over again, and you started scaling your size as you were able to build your profit in, listen, it doesn't take a lot of movement in the market to substantially double your money in a very short period of time. And that's what I want to show you this week. I want you to see it over and over again. Every day I'm going to show you an example of how you can do this by just investing a little bit of time, understanding that volume precedes price action, and price action reacts to supply and demand. It's that simple. We teach all that, we preach all that, and we have indicators that give you all of that knowledge. This is not something specialized or rocket scientist stuff. This is, just the principles of trading. Develop the plan, execute the plan. You need consistency and discipline. We will give you the tools, the knowledge, and know-how. That's what we do here at Hawkeye Traders. So, with that being said, although I know 2.166% is not terribly exciting, what else are you doing today to get 2.16+% on your money? Probably nothing. There is no investment vehicle out there that's going to give you that return today. You can maybe wait a year or 6 months or 9 months to get that, but you're not going to get it today. So, in order for me to offer you the ability to get that today, I encourage you to click the link below. Watch the Project V-Swarm webinar. It is going to give you example after example of how you can pull 2%, 2%, 2%, 3%, 5%, 8%, 9% over and over and over again. Start compounding that over a period of time, and that is how wealth is built. So with that, I implore you, click the link below, check out the V-Swarm webinar. Questions, comments, concerns, always feel free to call us, email us, or visit us at HawkeyeTraders.com. Have a great day, a blessed day, a profitable day, and I look forward to talking to you soon. Take care.